Is this thing on? Okay. Hello, everyone. We're going to change a little bit of gears here from just pure play crypto into the rise of digital influencers and the internet economy with a special fireside chat with Anthony Pompliano, who is the CEO of ProCap Financial. Among other things, he's got many business endeavors that he can tell you about here. So Anthony, maybe introduce yourself before we jump into it.
Yeah, nice to meet everyone. Thank you guys for coming. Entrepreneur and investor. We run an investment firm, Professional Capital Management. Historically, we have incubated companies in the private market, throw off cash flow, and then we invest that across public and private markets. And then this year has really been our foray into the public markets. We started to pretty heavily invest in public companies, but also we have two public market vehicles. One is a SPAC where we're the sponsor. The other is ProCap Financial, where we're the target of a SPAC. We raised $750 million for that vehicle with Clear Street, and yeah, that's pretty much it.
Great. So big picture, you were one of the first in a wave of entrepreneurs that have been able to utilize their online persona to navigate both the investor landscape as well as build companies. When did you first realize it would become a dominant economic force?
So in 2014, I was working at Facebook. I ran the growth team for Facebook Pages, which is top of the funnel for all of their revenue. And I got asked to leave that team and go work directly for Mark Zuckerberg and Sheryl Sandberg. And at the time, they wanted to communicate directly to users. They basically realized that they could not communicate to the user base. They had to go to the media, which then would warp what they were saying and then deliver that. And so their whole idea was, why don't we build a following on our own platform? This idea of like go direct. That's not. Hello? They were very early to understanding that, and so I helped them kind of figure that out from a data standpoint. I started to help other companies that were using Instagram or Facebook. By 2016, I realized I'd never done it for myself, and the idea was that audience was going to be a new type of currency in the world. Fast forward to today, I would argue that the best investors and the best entrepreneurs, they have monopolized attention. So whether it is an Elon Musk, whether it is Kaz at Open Door, whether it is Warren Buffett, or anyone else, you can now start to see that monopoly on attention actually leads to premiums, it leads to capital flows, and it leads to returns. And so I usually explain to folks, the younger folks understand it because they see it. They're on Instagram, they're on Twitter, they're on these platforms, and that's the content that they're consuming. For folks who might not be on those platforms, if you think about Warren Buffett is the original finance influencer. Sounds kind of weird to talk about it that way, but he pretty much understood that he could use certain tools. He's got an annual conference, which is like the mecca of capitalism. People literally go on the pilgrimage to Omaha. They're a disciple of Buffett's worldview, and he disseminates that at the conference. He disseminates it via an annual letter, and he only did interviews with one person, Carol Loomis, for years and years and years. And he was able to craft a message that essentially was the Allshucks grandpa who's in the Midwest, he's going to buy things for less than they're worth. Excellent execution. Now, when he stepped down, Berkshire immediately lost about 7 to 10% of its market cap. Why? That was the Buffett premium. That's not very different than Elon Musk, who with Tesla, people have always argued is the company overvalued or not, because the Elon premium is not 7 or 10%, it's probably closer to like 30 to 50%. And so you can see this in these companies over and over and over again, is the monopoly on attention or the monopoly on distribution leads to these premiums. And so I think that as we move forward, you're gonna see more folks try to figure out, how do I distribute information? How do I build these direct audiences? And then how do I use that to gain an advantage in the business and investing world?
Great. You've said many times that distribution is more valuable than capital or product. How do you define high-quality digital distribution today, and what are the best channels to get to your audience?
How much would you pay if you're a consumer business in targeting young females to have Kim Kardashian post on her Instagram? It's like basically priceless, right? And so what a lot of these folks with large distribution, use easy examples. You have the Kim Kardashians, you have the Mr. Beast, you have Logan and Jake Paul, et cetera. What they're realizing is historically they have been a middleman. Companies have approached them and said, hey, I'll pay you money, and then I want you to take my product or service, and I want you to tell your audience about it. They were being compensated as a middleman. They were basically getting paid a fee without any equity upside. Now what these folks are realizing is I don't need to get paid the fee. I can just own the company itself. And so that's why you see Kim Kardashian launching businesses. You see Mr. Beast launching businesses. You see Logan and Jake building multi-billion-dollar companies. And so the reason why I say that the audience is more important than the capital is because capital is very abundant, right? People in this room invest in things every single day. It takes an immense amount of time and effort to build these audiences, and you can't use money to buy them. The reason is because the authenticity, the trust, is not about money. It's actually about the connection between the audience and the person. And so the people who like Kim Kardashian, they didn't start liking her because she was running ads on Facebook or Google or any of that stuff. They liked her because of the content or what she stood for or what she was talking about or what she was doing. And so when you look at what is the hardest thing to emulate or recreate, like kind of the replacement cost, the audience would be the single most expensive thing to recreate or to rebuild. And Mr. Beast maybe is one of the best examples where people are starting to figure out they have very specific type of audience. Mr. Beast does not sell high-end luxury real estate. He realizes that he's got a younger audience, a very rabid audience, but they have a low income, low disposable dollar. So what does he do? He sells a high volume, low price point product. He's selling chocolate or food or things like that. Compare that to maybe a Ryan Serhant. Ryan's got millions of followers, but his is a much more affluent audience, and he's going to go and he's going to sell them real estate, specifically luxury real estate. And so you're starting to see the bifurcation in the market of what is the audience and then what is the product or service that can be brought to those people. And I think that now you're seeing a lot of public companies that are saying, wait a second, rather than spend money on marketing, why don't we actually go and just create the audiences ourselves? So take a company like Gemini, for example. They are going all in on live streaming. They literally have hired people on staff to create content to try to build their own audience so they don't have to go to folks that have audience and say, hey, we'll pay you to reach that audience. Just build it yourself. That is kind of this retail movement, et cetera. Now, one other thing I'll bring up is a lot of folks do not yet realize, but the single most important audience in finance is actually what I call an independent investor. An independent investor is somebody who tends to be digital native, so call it between the ages of like 30 to 50. They have high income, they're very sophisticated, but they do not trust the financial advisors or the stockbrokers. And so these individuals tend to get their information directly on the internet, so they're independent thinking. They're allocating directly to the market without a stockbroker or a financial advisor, so they're acting independently. And then they are chasing financial independence. Why are those people so important? If you go talk to hedge funds or big institutions, every single young person that works at those firms in their personal account is an independent investor. Guess where the ideas come from? They're doing stuff in their personal account, and then when they have conviction, they essentially want to get leverage on the trade, so then they go and they try to get it into the book at work. And so what you find is these institutions are now following that retail audience rather than the retail audience following the institutions. So if something takes hold, take Opendoor as an example. Opendoor stock exploded from 50 cents to $10 this year because that independent investor community said, hey, we like this thing. And as soon as they started to put volume into the stock, all of the institutions said, wait a second, there's energy, there's volume here, there's attention, we have to fast follow. And that kind of pushes these momentum trades. And so I think that that audience is going to become very, very important moving forward over the next 10 years.
That's great. You've talked a lot about the dangers of platform dependencies, but how should creators balance this with owning their own audience?
Yeah, man. I think we've gone through it all. We've been shadow banned. We had a YouTube page deleted. TikTok, they're not big fans of me over there in the CCP land. I think that there is one, diversification. That's kind of easy. But two, and probably more importantly, is you want to actually own the equity of products or services because you're building a customer list on top of the content. So if you, let's say, for example, have a business where there's a subscription component to it, if you lose the front-end acquisition platform, but you have the customer list, you should still have resilience to the business because you have some sort of subscription, you've got direct communication without an algorithm between you and that user. The other thing is you're starting to see more and more people figure out, how do I remove the algorithm in between me and the audience? And so whether it's live events, email, et cetera, they do not want to be at the kind of whim of these social media companies that are essentially putting their finger on the scale, whether they distribute the content or don't. And so it's an age-old problem. I think people will continue to try to figure this out, but people are very focused on how to actually own that relationship in a unique way.
Great. Do you think the next phase of kind of the financial influencer will be more decentralized, tokenized communities, creator economy, Web3 identity, those sort of thematic things, or will platforms continue to dominate?
So I don't really believe in like a financial influencer, right? If you think of in finance, like nobody calls Buffett an influencer. He's an investor. Nobody would call Bill Ackman influencer. He's an investor. Nobody would call Elon an influencer. He's an entrepreneur. But those are some of the most influential people in the market. And so the reason why I describe it that way is actually in business and finance, the key to the whole thing is if you don't have the skill of creating a business or allocating capital, then all of the influence is somewhat wasted. There's no kind of ability to leverage that in the way that maybe in other industries, you know, if you're in like the CPG world or something, you can do that. You don't have to have a business. You don't have to have any ability to invest. And the reason is because in the content, you will lose trust with the audience if you don't know what you're talking about. If you don't know how to operate a business and you start critiquing people who are operating businesses, you look like a fool. If you don't know how to invest and do it well, then the audience eventually is like, every time this person talks about an idea, I lose money, they stop listening. And so I think that there is a very unique aspect or kind of feedback loop in the finance world where it is all about long-term preservation of reputation, but that is done by being very effective as an operator and as an investor.
That's great. Since you are an entrepreneur and an investor and run a bunch of businesses, plus you have a media presence, how do you keep it all centered and authentic to your audience?
I have the blessing of the curse. I just say what I think. It's probably why I got a big audience online. It's also why every once in a while I get an email from my lawyers that are like, hey, that one, take that one down. Like, all right. No, I think that the world is starved of people who just say what they think, right? If you think of, go to finance as an example, you know, one of the things I'm pretty cognizant of and maybe obsessed with at the moment is if we all sat around a table and we said, okay, let's name all the great deal makers of the 1980s and 90s. We could come up with an immense amount of really, really great people with amazing track records that were known from an individual standpoint. If we try to do that exact same thing today, you very quickly realize that most of the great deal makers are not known because they've been swallowed up inside of these large firms. Now, why is that important? Well, inside of a large firm, everything is done by consensus. It's management by committee. And so what you do is you start to remove the tails in terms of deals. And so people just do things that are very consensus driven, very down the fairway, very spreadsheet driven. Well, that's great because you can still drive a return, but the asymmetry all of a sudden starts to disappear. And so in that regard, what you're going to see, I think, is you're going to see a resurgence of people who say, I'm willing to go out on my own. I'm willing to do this not by committee. I'm willing to take the brunt of both the success or the failure, and I'm willing to bet my reputation on it. That is important because in this world of creating content, you are held with your feet to the fire every single day. If you say something wrong, if you do something wrong or whatever, it is a meritocracy. And so if you think of like in media, there's a lot of journalists who, when they publish content on the internet, they're doing it behind a big brand. So if you work at Bloomberg or CNBC or whatever, some of those people would do excellent as independent kind of voices. A lot of them would immediately lose relevancy the second that they were out on their own and they had to compete in the free market of ideas because they don't have the brand behind them. The people who come native to the internet, they've had to win in that free market. And so what it does is you start to use that, whether it's deal making, operating, investing, and you combine it with the ability to talk freely. So one of the people that I think has done a fantastic job of this is Bill Ackman. Bill pretty much wasn't on the internet for the most part. And all of a sudden he realized, if I just say what I think publicly, I will get feedback so I can get better, I can learn, I can meet people, things like that. But also I can start to drive an audience. And so I think that that is really somebody who, they already had the track record in the investing side. Now they're starting to lean in. See, I think he's got over like 1 million followers. What's crazy is he used to have to go to the media and say, hey, I have an activist campaign, or I've got an idea, or I think Fannie and Freddie should be spun out of conservatorship, or whatever the thing was. Maybe the media wrote about it, maybe they didn't. He had no control over what they said. Today, he can just send out a tweet and reach multiples more people himself with no filter between him and the audience than going to the media. And so it doesn't mean that you abandon the mainstream media. It just means that you supplement it and you have this direct connection, which gives him much more ability to do the things he wants to do or kind of operate in the market. And I think you're starting to see this because also now you're starting to see CEOs do this. And so one of the things that becomes really interesting is it used to be for investors, you needed to have a Bloomberg terminal. That was where information came from. Now, most young investors, they've got a Bloomberg terminal and they've got Twitter, or they've got podcasts, or they've got whatever. But a lot of information breaks on X. And so if you want that information quickly, you now are actually having to look somewhere that most people aren't used to looking. And so there's this kind of demographic shift that's occurring where the conversation is going from Bloomberg chats or kind of normal information to a real-time global conversation online. And if you're not tapped into that, you're actually at a disadvantage. And that's why young people, I think, are so obsessed with this, is they realize that there's quote-unquote alpha online, and they're able to exploit that where maybe some of the principals or older folks are not yet paying attention.
Yeah. So on the audio side, you have a very successful podcast that you've been running for years. How did you decide to use that medium to talk directly to your audience, and what do you think the future of podcasting is? Are we kind of mid-curve, or are we towards the end?
There's something romantic about whispering in someone's ear for an hour. Everyone laughs, but if you think about it, you have a very unique connection with the audience because they hear your voice in their ear while they're working out, they're walking, they're working, they're whatever, but you're in their ear. And it's very episodic, it's very scheduled. Hey, this person releases Monday, Wednesday, Friday. This person releases every Tuesday, whatever. And it's long form, so you hear back and forth conversation. You get to know these people. And again, that kind of romantic whispering in the ear creates this very unique kind of relationship. Now, the reason why I started the podcast was I wanted to talk to people who could teach me things. And frankly, they had no reason to talk to me. So I was like, well, if I build an audience, then I can essentially say, hey, why don't you come talk to me? And in exchange, I'll give you a platform. I'll give you distribution to a lot of people. It's worked incredibly well. I've met many people I never thought that I would be able to not only meet, but learn from. And now what we see is we actually have the audience reaching out to us saying, hey, there's this other person that you have never had on before. You should go talk to this person. Or here's an idea that you should go and you should investigate more. And so it becomes this kind of like hive mind of folks who are all working to try to make the product better, but they're doing it with suggestions of people, ideas, or sometimes even negative feedback. It's there's a saying that if you want to know if you're wrong, just put it on the internet. They'll tell you in like 2 seconds. So like, you're a moron. And my favorite is you can tweet things and people will be like, you're a genius and you're a moron. And those are the first 2 comments, So it's kind of this feedback loop that I think is really effective. Now, when it comes to podcasting, I think that we are moving much more to a voice interface and kind of audio component. We have people who work in our business who literally want to work out of small meeting rooms instead of at their desk because they're talking to their computer all day. That's weird to me. I don't do that. Like, that to me, this idea of like they're going to communicate directly, but they do it and they say that it's faster. And so these tend to be younger people. And so you start to realize that the voice interface, the ability to listen rather than read, all of this stuff is starting to become bigger and bigger. And I think that what we have found in podcasting is it started with that audio relationship, but now you pretty much don't have a podcast unless you also record the video. And probably the most interesting thing there is about 3 years ago, we saw that the percentage of people who would watch the podcast on video, not on their phone or not on their computer, was actually on their smart television. So not YouTube TV, but the YouTube app on a smart TV. That went from 7 to 15% about 3 years ago. And so we said, hey, we should double down on this. Today, that is closer to like 35 to 40%. And so it is essentially replacing television for young people. Add in the fact people are usually surprised, the number one platform that people watch, long-form podcasts, 45, 60-minute conversations, the majority of people watch it on their phone. Again, I'm like right on the cusp. I don't really watch long-form stuff on my phone. I have younger brothers, they do. And so this younger generation, it's mobile first, it's kind of TV being replaced by YouTube, et cetera. And so what you realize is that these podcasts are not really just this audio experience. They're essentially replacing what many people who are my age and above thought of as television or entertainment. And so from that perspective, now, like, this is all you need to have a TV station. And people start thinking about, like, well, what do you do if you own a TV station? How do you program it? How do you communicate? What's the message, right? How do we want to use that to our advantage? And I think the people who have done this really, really well have turned that into success outside of just the distribution. They're not running a podcast. The podcast is essentially the zero-cost marketing for these businesses or these investments that they're making.
Great. And AI. As it pertains to media brands and influencers and trust, things are going to get a little bit weird. And how are we going to know if Anthony Popliano is recommending an investment or a business or a thought going forward? How are you looking at managing the potential for frauds to be out there?
So I don't worry so much about the fraud stuff. I'm sure it'll become a problem at some point. Right now, we're actually going the other way. Like, we're trying to lean into it, and we've been trying to essentially eliminate me, right? I've told our team multiple times, is like, how do we eliminate me having to record the audio? How do we eliminate me having to write? Not because I'm not going to write or I'm not going to record, but all of a sudden, if you have the ability for the AI to write just like you or to record just like you, you can start to do really interesting things. So I'll give you guys an example. A couple of years ago, I realized that every physical book has an audio book. Well, in the finance world, what is something that everyone wishes that they could read, but no one takes the time to do it? It's usually the letter from management to the market in the S1s. And if you go and you read those, they're incredibly valuable. But you got to go find the S1. You got to go find exactly where the letter is. And you got to sit down and read it. The Edgar database makes it super difficult to do. So then sometimes you print it out. You got physical paper, which is like blasphemy for young people, et cetera. So we had the idea of, why don't we just create a podcast where somebody sits and reads the letters in those S1s. So every episode is a different letter. And you could go do historical ones like Amazon's S1 and Bezos's letter, all the way to modern day ones that are going public. We did that. Man, you ever sit down and read? Some of these things take 45 minutes, an hour to read, and then if you want to put it out on a frequent basis, it's very time consuming. Well, in that case, that letter is essentially a script. And so if you had an AI with your voice, you could basically just have it read, and then it's your voice, so people still get a lot of the same benefits. Now, the AI is like almost there. It's still slightly robotic, but I think within the next 6 to 12 months, that's how good it's going to be. And so, yes, there will be fraud. Yes, there will be, kind of these knockoff copycat type stuff. But I think that actually the technology increases the types of things that you can do. But it's going to be very important for people with audience to communicate when it's AI versus when it's not. Because the second that someone thinks it's AI, they will lose trust in what you're doing because they think the authenticity is gone. And so what you're going to probably see is people will say, hey, here's my human content, and then this is an AI. This is an avatar of me. This is, an AI voice reading this. And they're going to try to delineate the difference so that if it's clearly labeled, you always trust the thing that isn't AI, and you know that that's real. And so it's really going to be, the onus is going to be on the actual people to, go ahead and label that stuff versus try to trick the audience. Because the internet's very good at not being tricked. You can trick one person, you can trick two people. It's very hard to trick millions of people. And so people will figure out that it's AI, they'll call it out. Once it's called out, you pretty much have lost trust. And so I think people are going to have to kind of avoid that and just lean into, hey, this is the AI content and this is not.
That's great. So you are an investor and run a investment firm. Which companies and themes are you most excited about right now?
I think that there are kind of core holdings. Obviously, people know me for kind of the conviction around Bitcoin. I think that Bitcoin is the new hurdle rate, is the best way to describe it. If you hold S&P and you look over the last 5 years, it's essentially doubled. If you denominate that same S&P in Bitcoin, you're down like 85%. Are you up or are you down? It all depends on what the denominator is. And so the idea of making Bitcoin the hurdle rate or kind of your Bitcoin rate of return means that you are essentially eliminating everything that comes from debasement. Right? If the dollar has lost 30+% of its purchasing power in 5 years, now having Bitcoin as a hurdle rate, obviously that hurdle rate is much higher. It's much more difficult, but it keeps you much more honest as an investor. What is the actual alpha that you're generating? What is the actual return that you're capturing? So I think that Bitcoin will continue to be kind of a staple in the portfolio. I plan to hand my Bitcoin to my grandchildren one day. Maybe it'll be worth a lot, maybe it'll be worth a little, we'll see, but pretty much nothing can convince me to sell that. But I also think that there's two major themes that we're spending a lot of time on. The first one is we believe that there is going to be a very large shift from private markets to public markets. That's why we have gone on this kind of foray into the public market. In the private market, let's say that the average venture fund is reported at somewhere around 17% annual return. QQQ was around 13% over the last decade or so. So you had 400 basis points of outperformance in the private market, and in exchange, you had to lock up your capital for 10 to 12 years. Pretty good trade for most people, especially if you had long duration assets. Now, because there's been so much capital that is poured into the private market and public markets have done so well, that gap is closing. And so let's say that now all of a sudden there's 150 to 200 basis points of outperformance in the private market. Big assumption, but let's say that's true. That now means that are you willing to trade off 200 basis points of outperformance to lock your capital up for 10 to 12 years? I think there's a lot less people that are going to be willing to do that. And so we think that there's going to be quite a bit of shift into the public markets. And then the last thing is, I think there's a lot of investors, especially in the traditional finance world, who have been very skeptical of quote unquote new things. And they're just now coming to the conclusion I should have exposure. You can see things here like Bitcoin and digital assets. You can see things like self-driving cars with Tesla, Palantir with AI, et cetera. That is kind of driving looking in the rearview mirror. Most of the return has already been captured. You're supposed to be buying Bitcoin when it was $1,000, not buying it when it's $100,000. Doesn't mean it doesn't still have a good return here, but maybe that return is 25, 30% moving forward, where before it was like 90 or 100% compounded annually. Same thing with some of these other companies, right? If you think of, I think Elon's pay package, he's got to get to like an $8 trillion company. It's a lot, but there's much, much more asymmetric things. So the kind of next set of things that we're very interested in, we think humanoid robotics is probably going to be the most asymmetric thing in the market. It is the largest addressable market. You're literally replacing human labor in all kinds of different places, whether it's in your home for cooking, cleaning, folding laundry, babysitting your kids, et cetera, or it is literally the barista at the coffee shop, the warehouse worker, or maybe even in an office setting. So we think that that is going to be, hundreds of trillions of dollars of market cap over time, just with that alone. Right now, there's about 3 to 4 companies in the United States that are mostly private, and then obviously you have Tesla in the public market. Those private companies have grown very quickly. They have working prototypes. They're shipping to customers in some cases. But one of the things that we believe is coming down the pipeline there that will really drive value to those U.S.-based companies is we think that the U.S. government is going to ban any Chinese-made humanoid robot from operating within the United States because they are essentially sensors that can get audio, video, and kind of geospatial data. And so if they're able to capture that stuff and then ship that back to China, we think the U.S. government's not going to be comfortable with that. And so we're going to need more straight humanoid companies, but we're also going to need more robotics companies and more component manufacturers. And so I think you're going to see that really kind of play out. Another area we're very interested in is the prediction markets. We do believe that we're moving to a world where people want to speculate, not necessarily in an undisciplined manner, but people have opinions and they want to wager capital on those opinions. And so right now, prediction markets are very popular with sports. We think that this will become part of the news. Like I envision a world where every single media site literally has a prediction market at the end of the article. This is what we think, this is what we're reporting. Do you believe it or do you not? It brings new monetization to these media companies, but more importantly is it allows people to interact in a very unique way. And so we think the prediction markets will become big. That feeds into these everything exchanges, whether it's NASDAQ, ICE, Coinbase, Kraken, or net new players. You're going to have one exchange. You can go and trade public equities, crypto, prediction markets, and a number of other assets, but you're going to do it in one area. So we think there's a lot of infrastructure. And then the last thing that I think people are starting to talk about quite a bit is longevity. But the area of longevity that I'm maybe most interested in is not so much like what is the pharmaceutical stuff. I think there'll be a lot of returns generated there. It's just not my game. I am much more interested in how do we start to replace human components with machine components. And so, brain-computer interfaces is one example of that, where you actually take the computational power of your brain and you put an actual computer in, and it starts to augment or replace some of the human brain's functions. We've an investor in a company called Atom Limbs. They essentially have a robotic arm that they attach. You use your brain and you can move it just like you would a normal human arm. 20% of the wait list, tens of thousands of people on the wait list, but 20% of the wait list, they have 2 arms. It's just that one of them may not work 100%. And so they're literally willing to amputate their real human arm to put on an arm that would operate better. Knee replacements, hip replacement, right? This is not a new thing. It's just people don't yet understand this. And so I think you're eventually going to have this with organs and many aspects of the human body. That is a very long-term trend, but we do think that you're going to continue to get a lot of kind of innovation from that standpoint. And when that happens, we think there's a lot of returns there as well.
That's great. Well, thank you so much for coming in the fascinating conversation. We'll have you back next year. Thanks.
I didn't agree to that yet. All right, thank you guys.